Hello everyone, this is Juan Sarmiento and today is Friday, December the 2nd. I don't really have any new candidates, so I'm going to go straight to the analysis of what we have and what we can do to adjust, okay? I'm going to organize them alphabetically by simply clicking here on symbol. Okay, and a couple of clicks will organize them alphabetically so then we can go in order and not mess things up. Okay, so let's start with this Caterpillar, and it looks like we have a $43 profit. Before we do anything else, we want to ask the question, has this been rolled over already? Because then our profit might be more than $43, and I'd like to know that. So go to the Monitor tab, and you see that you only have, it's important that you put the symbol here, and it automatically goes there. If you have this yellow, I guess you call it icon here, because you have the current account and you have selected Caterpillar, it automatically puts the Caterpillar there. And then I go a number of days, I put 360, that's fine. Then we look at for Caterpillar here in the list, and you can see that so far this year we have $68 in profits. Okay, this might be from another trade, but I don't see any other trade other than this one in the last 365 days. So you put 365 days and you'll know what you have done all year long. So we can analyze that, analyze trade, and it matches perfectly. If I say hide simulation, it gives you $58.04 profit and a decline of $130 today. If you hide the position, it would automatically put the simulation. You click here to show it, and it shows the exact same amount. Okay, so here we go. What do we do now? Well, we know we have a profitable trade, and we would like to extend that possibly. It's doing well, don't get in the way. We have $88, and I want to adjust this, and you see that it has December the 9th is the next expiration. Okay, so the puts are completely out of the money. You don't have to focus on that, but you for simplicity you simply roll both the puts and the calls 1 week before expiration. Okay, and that's on the 9th, that's a week from now. So then you say analyze rolling. And what are we doing? Well, we're rolling them to a month from now. Let's say January the 6th, sounds great. And doing that will bring me $5.84. The problem is that my deltas are negative here, and doing the rollover, it will turn them positive. So take a look and see, do you think this stock is likely to continue higher, or do you think it's likely to go lower? I don't have a big opinion, but I would say down. Okay, so the first thing we need to do is to do the rollover for simplicity. Okay, let's do that. And also, alternatively, you can do the call side alone and leave the put side alone. And then next week, as expiration comes, you could add puts, because the puts are out of the money. So let's do only the calls, because we are way up here. Okay, so do only the calls, and then say analyze rolling only the calls, and make sure you put January 6th. Okay. All right, so that gives me a more limited delta, 18. Sounds great. I'm willing to do that, confirm and send. Okay, and then next week, when we are, okay, here it is, that's a trade done. But next week, this put, if you say analyze closing, you'd see that it's got 60 cents there of value that we would have to pay back. Well, what I'm going to do is leave it alone, because it's so out of the money. Let's say it's not impossible, but unlikely that it will go to 220 and make this short put acquire more value than 60. Then at that time we could sell January 6 puts, just sell the 2, and so 2 plus the existing 2 equals 4, which is equal the long ones. Okay, so there wouldn't be any big deal. So I make a note of it, and we'll take care of that next week. In 19, deltas is pretty good. Okay, if the stock continues on higher, we have 19 to take profits, but if it goes lower, volatility would increase and we'll make profits with that. And our delta puts, short puts, we could possibly close them at the time and on the day of expiration, close that for a limited value, let's say 1 cent, 2 cents, something like that, and sell this January for a little higher price if the stock declines from now. Okay, so this is one way to approach it that is more elaborate, but I want you to know that you can simply do both at the same time, roll them over to January, or you can do this partial, which is you roll over only the ones that are in the money, leave that out of the money, out of the trade until next week. Because the deltas are so low, I don't have to adjust anymore, but we could sell a call here. One of my long calls, okay, but that will make it very negative, as you can see. I don't want to do that, right? So let's leave it like this. It looks pretty good to me, okay? Why? Because if the stock continues on higher, we have the potential to make money. If it goes lower and falls here in this area, it's more money than we have now. So further profits, in addition to volatility value that it would be added. Okay, let's go to Cisco. And, oops, I don't know why it does that. Okay, so in the case of Cisco, December the 16th, we have 2 weeks to expiration, so we don't have to rush onto doing anything. I have a P&L of 24. Go to the monitor tab and see, okay, we do have only one trade. Okay, and right now is what we have with a little loss of $14, $13.96 to be precise. And okay, I'm not going to do anything. Perhaps next week the market collapses, or perhaps Cisco goes up 10 points and then we will be at 49 here. It looks great. Okay, it's exactly what we want to do. No need to change anything until next week, which will be 1 week to expiration, and then we have to deal with the shorts. And let's say now we have a profit of $11. If we lose money, we can say, well, I'm losing money, I just close the trade. I don't want to lose any more. Okay, let's move on to Gilead. Gilead here. Okay, let's close all this before we do anything else. We see that we have 108 delta. Sounds great. Let's take a look at the chart. Well, the stock has been flying high, okay? So I want to take a little profit. Well, let's see what happens if we do the rollover. First, let's see what is our trade. It's a single trade. It's exactly what we have. We have not done any rollovers yet on this trade. And it expires next week. Guess what? We're going to do the same as we did for Caterpillar. We're going to roll over only the call side and see what happens. Analyze rolling. And we're going to go to January the 6th. Okay, not much there because it's deep in the money. You see, it's trading at 88 when my strike price is 80. So we are going to get only 20 cents out of that. But it's an adjustment that is necessary. Now, because we have a delta 106, 170, and the stock is way up here, I don't think it's going to go much higher. I might be wrong. Who knows? Nobody knows the future. But I would say, oh, well, we have a pretty good run up. So why don't we take a little money off the table? Well, we can sell one additional call of the January calls. How about that? We can do that. You need to say custom and then click the negative. You're selling one call and that reduces it to 86. Do one more call and that neutralizes it completely. Okay, I think I want to do that. We're taking our profits now. Get it? On the put side, well, we'll deal with the put side next week. Why? Because the put will be close to expiration without any intrinsic value, and then we could sell at that time the January 6 puts 80 strike price. And we can we'll see next week. I want you to see that next week. Okay, so for the time being, hey, that sounds great. We're going to just simply neutralize my delta by selling 2. Instead of having 8 short calls, now we have 10 short calls. Or you could do the 8 and sell one of my long-term calls as well. Okay, so this is one option. The other option is to do the normal rollover. Analyze rolling. Okay, and make sure that it is January. And we get $42 for that. And then on top of that, we reduce 1 call here or 2 calls of the February long calls. We're going to sell 1 or 2. Okay, so if we did that 1 or 2, you'll get a whole lot more money back and your deltas will be 49. That sounds to me actually better. Okay, instead of selling the short term and it's actually adding commissions, let's do that. Okay, you see that the trade looks pretty similar. You can even sell 3. And then it's negative. I don't want to make it negative. I want to keep it always positive. 48 sounds great. Okay, so let's first sell this long call, these 2 long calls. Okay, I think I want to do that. And that gives me $1,800. If I were to do this one here, that would be $1,900, but I'm not considering yet this portion here. That will give me 360. So yeah, very similar, but I want to sell the long-term calls in order to reduce my number of contracts, my number of options. Why? Because that way I have to pay less in commission. Commission is not a big deal really, but it's just a good practice to reduce the number of options that you have, okay, instead of increasing them. So if I have done what I propose first, to increase the number of shorts, I increasing the number of options that then I have to close at some point unless they expire worthless. Okay, so let's do that. Let's do these 2 trades first, sell the two calls and get $1,800. And then we are going to do, it's filled out rather quickly. Great. And now we're going to do the rollover. Make sure that it's open here. Yeah, it's open, the lock. And that way we get some money back. Oh, that's January the 13th. That's not what I want. Let's cancel that. Cancel. Okay, so I have January. I want to put 6 rather than 13. And that gives me 32, 37. Okay, let's put 40 and see if it gets filled. If not, we'll reduce it. Okay, so now look at that. It looks a little negative. That's not what I wanted. It looks like I sold 4 instead of 2. What the hell happened here? Oh, I sold 2. Okay, I sold more than I wanted. Now I'm too negative. Well, let's confirm this. Let's send this. And then I see how I adjust, because I don't want my deltas to be negative. Well, that's not what I wanted, and buying it back will cost me money. What did I say too? It filled out the trade twice. If I were to buy that, I would buy it for 90 cents, but I don't think that's going to work. But let's correct. If we could buy it from 90 cents, that would be great. But somehow I doubt it. Not what I wanted to do. But I wanted to buy two. I have to buy it 2 bucks because I don't want my deltas to be minus 178. And now you can see it's 9.15. That's too much. I sold them for 9.10, and now I'm going to lose 5 cents. Let's put 9.10. And let's see if it gets filled. All right, let's move on, and I'll be back with those a little later. Let's go to Goldman Sachs. In the case of Goldman Sachs, is so far a loser. Let's verify that. Go to the monitor tab, account statement, and yeah, that's the current trade. So it's a little bit of a loser. Let's analyze that. $46. I wouldn't say that's a big loser. So we could certainly do the call side. Okay, let's do only the call side. Analyze rolling. And I'm going to roll it to January as well. And that makes my deltas neutral. And then the put side would take care of it next week. Okay, let's leave it there to attempt to fill, and we come back to it, all right? JP Morgan, I think, is a problem here because this is definitely a loser. We have $265 loss. So instead of prolonging that, I just take my loss, okay? That's a fairly good loser. I don't want to complicate by rolling it over when it's a loser. So let's just close that. That's an easy decision, you see. Is it a loser? Close it. If it's a winner, roll it over. That's my philosophy, okay? Let's move on to LMT, that's Lockheed Martin. And this one, as you can see, has the expiration on the 23rd. There's plenty of time so far. Let's go to the monitor tab. And this one I have had. I've already done a rollover because it was November. Or it's an older trade, I think. Let's say analyze trade. Yeah, that's the trade I have. So far, a bit of a loser. And this must have been part of a previous trade. Let's see, LMT. LMT year to date, $60 loss. That's not too bad, okay? It is a loser, but obviously we have lost with this trade, but obviously this is a bad trade, $14.99, but I don't have to roll it over right now because the shorts are until December, so who knows what is going to happen between now and then. I may have made a good money with this trade before. I don't understand this. Why is this here? November, December. Oh, I see. It is a rollover. Wait a minute. This is November, is the short. Okay, let's see. Analyze that. Perhaps it's not such a big loser after all. Let's see. So we need to bring all the trade over here, okay? You can see that I roll over the call side and the put will be back to JP Morgan. It looks like closed. This put here was added. The November one simply expired. The December I added, and so when you put everything together, it's a small loser, 67. Okay, so that means we have is a profitable trade, even though it looks like a loser here, because this portion is not taking into account all the other portions of the trade that we made. Okay, you can calculate the cost. So if you say, you see here, I'm going to write this down. You see the original trade was $100.30, and how many of that we did? One lot is 100 shares. So our cost was times 100 equals 10,000. 10,000 and $30. $10,030. Then we get this credit. This credit here of 930 is 900. Let's see, $930. That's a $930 credit. And then we have this also $790 credit. Is this number 790 times 100 because we have one lot? Okay, so my cost was, how much was our cost? Let's see the calculator. We started with the cost of $10,030, and then we got a credit of $930, okay, and another credit of $790. So our cost really, when you consider all the portions of the trade, is $8,330. Now I copy this, analyze trade, but I make the adjustment. Instead of putting November, I put December the 31st right there. Okay, hide the position, and now here instead of 130, really, once you correct for the credits, you ended up with $83.10 or $8,310. That is our trade right now as it stands. You can lock this if you want. No, it's not going to lock. That's our current trade. So then we see, oh, wait a minute, we don't have a big loser. We have a winner. Well, it's moving right now backwards and forwards, okay? So we leave it as it is until December the 23rd. So it is not a loser, at least not a big one. But we go to the monitor tab and highlight it here, and you see that's the same number, which a few minutes ago was positive and now is slightly negative. So we just don't worry about it. Here's the number, the current value. Okay, it's a little below, so is my 8,310 minus 15 is close to that. Yeah, it's exactly that number, which is the market value. We have a loss of $15. Okay, I'm gonna leave that alone because there is plenty of time to expiration. Okay, but you can leave the simulation here for future use. Let's go to Starbucks. And Starbucks is a slightly looser, but let's go to the monitor tab. Yes, it is exactly like it is, and this another December the 13th, December the 23rd. So we have 2 weeks to expiration, or 3 weeks to expiration here. Yeah, 21 days. So I'm not going to change anything yet. All right, so leave that alone. Okay, now let's go back to what we were trying to do. Okay. All right, so let's adjust the Gilead here so it gets filled, and I'm gonna have to buy back, declare a loss of 10 cents here because of my stupidity, which happens from time to time. Okay, so let's adjust this. First, adjust the Goldman Sachs. Just unlock it and hopefully get filled at that price, 365. And the Gilead, I'm gonna pay the 920 if it will take it. Just put the mid and give it a chance to work. And this is, the credit is 40 for the rollover of the calls. Let's reduce it just a bit. See if we can get it for 35 cents. Okay, and then play along until those get filled. That's all I can say. Okay, and that's about it. For the year, it hasn't changed much. It's been around 11,500 from most of the year. So we never know where the market is going to collapse or spike in volatility, give you a big winner. You never know. So you have to play the game and make your adjustments so you don't have big losses and let it play out. Okay? And that's all for today. Thank you very much for joining me, and see you next time. Bye-bye.